In this video, I'm going to share with you 7 trades I've just closed out over the past 4 days. All 7 of these trades were winners. I'm going to show you the actual trade. I'm going to talk through the technicals of why they worked out so well for us. And in the end, you'll see the profit that we made on each one of these 7 trades. The first cash secure put option position I'm going to share with you is the one we did in PayPal, where we sold the October 18th $65 cash secure put option on September 11th. Here you see that for selling that option, we collected $1.16 per share. Why did I feel comfortable doing this trade? Here you see the daily chart of PayPal. Where you see this yellow arrow, that's the day that we entered this trade. And where you see the yellow arrow pointed down, that's the day we exited this trade, which I'll share that trade with you in just a minute. But overall, notice what had happened with PayPal over the preceding month or so. Notice it had been trading in a nice zone with a low around 56 or 57 and a high in this area right in here around 68 or 67. Because recently it had advanced through that area of resistance, it made a new higher high of around $73 or $74 per share. It then came back down and tested that previous area of resistance. It tested it for support. Notice how many times that area had previously served as resistance for it. Right here at the end of July, early August, it served as resistance. Going back into June, again resistance. Back here in May, April, and March, and even all the way back here in February. This area around $68 had previously served as resistance for PayPal. Every time it got close to it, it found resistance and the sellers pushed the stock price back down. Well, when it was finally able to push through there on some nice high volume and nice green candlesticks, I was waiting for an opportunity for it to come back down and test that area for support. That's exactly what I found it doing in early September. But in addition to that, it was also testing this green 50 moving average here on this daily chart for support. Well, it looked like it was finding support, so I took the trade that I just shared with you. So how did it play out? Well, over the next several days, PayPal had a nice advance. In fact, it advanced over 10% in just under 9 trading days. Now remember, we entered this trade on September 11th. We'll fast forward to September 19th, and we're able to close this trade out for an 80% profit. As you see here, we bought to close this PayPal October 18th $65 cash secure put option for 20 cents per share. So that's the first winner I wanted to share with you. Let's move on to the second one. Here you see the details on the second trade I want to share with you. The second of 7 winners I've closed out over the past 4 days. On September 9th, we sold to open the Amazon October 18th $160 cash secure put option. For selling that option, we got $1.72 per share. Let's see why I felt comfortable doing this trade. Again, we're looking at the daily chart of Amazon. Where you see this yellow arrow pointing up, that's the day we sold this cash secure put option. But I've zoomed out here because I want you to see something. Notice what's happened every time that Amazon has approached this red 200 moving average on this daily chart. Notice that it found support initially in September and October, but then in November, it pushed through that 200 moving average, but eventually it did serve as support for it and it took off again. Well, now I'm going to zoom in here so you can see the more recent months. Notice what happened here in August. Amazon had a big gap down overnight. It gapped down over 11% over the next couple of days. But then again, it quickly found support. It made a nice little advance, filled this gap, which stocks tend to do over 90% of the time. So it filled that gap, then it came back down and notice where it was at, the red 200 moving average on this daily chart. Notice that also was very close to an area that has served as support for it going back several months into April. The area also served as support for it back here in March and served as resistance for it back here in February. So I believe this area of potential support as well, and probably even more importantly with the fact that it was around this red 200 moving average, which over the past several years had served as nice support for it. Because of that, I feel like it was a good time to sell a cash secure put option against Amazon. I'm going to share one more chart with you here. This is the weekly chart. And notice where it's trading at on the week that we did this trade. It was right at the green 50 moving average. Over the past month or so, it had found support at that moving average, and it was down around that moving average again. I believe it was about to take off, and in the end, I was right. So how did the trade turn out? Well, over the next several weeks, Amazon had a nice advance. In fact, it advanced right at 9% over the next 10 trading days. So how did the trade turn out? Remember, we sold this cash secure put option on September 9th. We got $1.72 per share for it. Fast forward to September 19th, and you see we bought the October 18th $160 cash secure put option back for 32 cents per share. Another 80% winner. Let's move on to trade number 3. Here you see the cash secure put option we sold on TROW on September 5th. Notice we sold the TROW October 18th $95 cash secure put option. We got $1.05 per share for it. Let's go to the charts. Here you see the daily chart of TROW. Notice what had happened around this time when we sold this cash secure put option. The up arrow is the day that we sold that cash secure put option in TROW. Notice that just several weeks earlier, it had come down and found support around that $100 strike price. And then had a nice advance, but found resistance at the green 50 and red 200 moving average. Now that's not a bullish sign, that's a bearish sign. But then came back down, and I expected it again to find support around this area, around what found support back in early August. But there was a kicker here. At this price, I also believe that TROW was undervalued. Not tremendously undervalued, but somewhat undervalued. Because it was back at an area that previously served as support for it, and in my belief that it was somewhat undervalued, I felt comfortable selling a new cash good put option in it. But there's something else that made me feel comfortable selling this cash good put option. Now I've switched over to the weekly chart and notice the support in this chart. This $100 area had over a long period of time of the previous several years served as support for TROW. It's almost like every time it came down there, the whole world thought it was on sale and so it started buying it. So although I didn't like those trading under this red 200 moving average on this weekly chart, it was at an area that had many times of the previous several years served as support for it. That's another reason why I felt comfortable selling this cash good put option against TROW. So how'd the trade turn out? Well, where you see this yellow arrow, that's the day we entered this trade. Now notice that it did drop down over the next couple of days, but it found support right around where it found support back earlier on August 5th. But then it took off. And over the next several weeks, it had a nice advance of around 6%. With it being around that red 200 moving average, which I expected to serve as resistance for it, as well as the fact that we were able to achieve 80% of our profit, I decided to close this trade out. So remember, we initially sold this put on September 5th. Fast forward several weeks to September 23rd, and you see we bought to close this TROW October 18th, $95 cash good put option for 20 cents per share. Another winner. Let's move on to our next trade. On September 3rd, I sold a cash good put option in eBay. Here you see the details of that cash good put option. I sold the eBay October 15th $55 cash good put option, and we got 56 cents per share for it. I'm first going to start here with the weekly chart to show you why I felt comfortable doing this from a technical standpoint. But actually, before I talk about the technicals, I want to talk about the fundamentals. I believe that eBay was still at this point somewhat undervalued, and that's how it all started. So you look for companies that are fairly valued, or even better, undervalued to sell put options against them. Where you see this upward pointing arrow, that's the week we did this trade. Notice what had just happened with eBay. It had a nice run up over the previous several months, but it kind of consolidated over the previous several weeks. Notice where it consolidated at. If I go back over here to April of 2022, notice that this area served as support for it back in January, and then several months later in March and April, it served as resistance for it. That meant that if it could push through that area, that'd most likely be its next level of support. And that's exactly what happened. It got up enough energy or enough buyers to push through that area of resistance, and then came back down, tested that area again, and then settled, and I believe it was poised to make another run higher. So how did this trade turn out? Well, fast forward about 3 weeks, and eBay had a nice run of around 8%. With us being able to realize a profit of 80%, on September 23rd, I decided to close this position out. So we bought to close the eBay October 18th $55 cash good put option for 10 cents per share. Another winner. All right, to be honest with you, I've lost track of what trade we're on. So here's the next trade, whatever number that is. On August 26th, we sold the CB October 18th $2.60 cash good put option, and we got $2 per share for it. At that point, I did not think CB was undervalued. I thought it was pretty much fairly valued, but I still felt comfortable selling a cash good put option in it because of the technicals. Notice what happened recently with CB. Notice this area was trading at around 275 had previously and multiple times served as resistance for it. However, on the day that we did this put option, it had broken through that area of resistance. I'm going to zoom in here so you can see a little bit better. Notice it pushed through this area right in here where it found resistance about 2 weeks before. Now still to deal with this resistance right here around $280 per share. And that's why I sold the $2.60 cash good put option. Notice that CB could come way down and we still be okay on this trade. We could still win on it. In fact, from where it was trading at, it had to decline about 5%. If it got down to $2.60 per share at that point, I believe it was more fair valued. So I was more comfortable with dealing with it at that 260 level. But my goal wasn't to let this put option be assigned to me. It was to close this position out early for an 80% winner. Well, you see here on the chart what happened. Over the next several weeks, CB had a nice advance. It advanced over 5%. So if you fast forward to September 23rd, you see that we bought to close that put option. We bought to close the CB October 18th $2.60 cash good put option for 40 cents per share. Another 80% winner. Let's move on to trade number 6. On September 12th, we sold the CMI October 18th $2.70 cash good put option. We got $2.17 per share. Notice where CMI was trading on the day we did this trade. It was trading for around $295 per share. And remember, I sold the $2.70 put option. I sold the put option that was way down here. And the reason was that I did not believe that CMI was fairly valued at that $295 price. But at $2.70, I felt a lot more comfortable dealing with the stock at $2.70. So I gave myself plenty of room to be wrong and still win on this trade. In fact, the stock had declined over 7% and I could still get a 100% win by selling this cash good put option. So why did I do this trade? Well, let me zoom out for you here. We have a nice thick white trend line that you see served as support for it multiple times over the previous months. And notice where it was at on the day we did this trade. It had come back down, was finding support around that white upward sloping trend line. That also coincided with the green 50 moving average on this daily chart. And as I zoom out here, you see that overall it was in a nice uptrend on this daily chart. It was at the lower part of that upward sloping trading channel. Because I had plenty of room to be wrong and still win if it came down in price, even down to 270, I decided to sell this cash clear put option. Notice what happened over the next couple of weeks. CMI had a nice advance of over 8%. As a result, on September 24th, I bought to close this position. I bought to close the CMI October 18th 270 cash clear put option for 40 cents per share. We realized another 80% winner. Now let's move on to trade 7 of 7. That's 7 winners closed out in less than 4 days. The 7th trade is Honeywell. On August 20th, I sold to open the HON October 18th 190 cash clear put option and got $2.17 per share for it. Let's start by looking at the technicals on the weekly chart. Notice where Honeywell was trading on this weekly chart. It was trading right at this red 200 moving average. And notice how Honeywell had been responding around that red 200 moving average. Yes, there were several times where it did break below it, but it pretty quickly came back up. But notice that overall we have 1, 2, 3, 4, 5 times over the previous several months where that red 200 moving average had served as nice support for it. That was reason number 1 from a technical standpoint why I felt comfortable selling this cash clear put option. Now I'm going to switch to the daily chart. Notice what happened with Honeywell over the past several months on this daily chart. Overall, it was in a nice uptrend. I could draw this upward sloping trend line in multiple ways, but the way I chose to draw it from here was with the low from February and the low from a few days before I did this trade in August. But keep in mind that I sold the 190 put option. Notice where that 190 put option was at. It was right around the area where if it came back down, that was the ultimate area of support for Honeywell back in April and May. So if it did not honor this trend line, I had another spot where I thought it might find support right around our 190 cash clear put option strike price. And one reason why I sold that 190 put option is because I thought that was pretty much Honeywell's fair value. So way up here at 195 or 200, I thought it was a little bit overpriced. But down here on 190, well, I didn't mind dealing with it from a fundamental standpoint at that price. So I gave myself some room to be wrong. And if I had to end up dealing with assignment as a result of selling this put option, I felt a lot more comfortable at 190 than I did 195 or 200. So what happened with this trade? Over the next several weeks, Honeywell made some nice highs and nice lows, and ultimately it just continued to drift higher. But even more importantly for us, that upward sloping trend line served as support for it multiple times. As a result, on September 24th, you see we bought to close the HON October 18th 190 cash clear put option for 40 cents per share. That was another 80% winner. As you see in this video, by combining fundamental analysis with technical analysis and then selling options using that knowledge, it can produce consistent cash flow and returns. And over the past 4 days, we've been able to close out 7 of 7 winners. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you'd like to see the process I go through to pick the stocks that I buy to own outright or to sell cash clear put options in, check out the video at the link above in the description below entitled Beating the Market, My System for Picking Winning Stocks. Until next time, happy investing, and we'll see you again soon.